Will the real economy please stand up? Is it the economy that's definitely stalling, if not faltering, as the lousy jobs number told us this week? Is it the pathetic one that shows manufacturing slowing in May after a pretty good run? Is it the sad sack one that the Federal Reserve is worried about to the point where it might have to find something else to do to get the recovery back on track? Or is it the strong economy, made up of American companies that are doing fabulously well enough to rally huge today? Best day of the year, Dow surging 287 points, S&P rising 2.3%, NASDAQ pulling 2.4%. So which is it? As Kramer, Powell, Eminem would say, please stand up, please stand up. Was that Slim Shady? All right, is the economy good or bad? Or maybe, just maybe, the real economy is both. We got a country where companies simply aren't hiring with any alacrity. But we also have a country where companies are making fortunes and raising capital for next to nothing. They're just choosing to return that money to the shareholders rather than expand and hire. We see that divergence play out here in this battlefield every day. Now make no mistake about it. We could care less. We wouldn't even care about our economy or our stocks if we didn't get a whiff of best case scenario hope today out of Europe. Something really odd happened today. We got a statement out of the European Central Bank which pretty much told us that we're doing a much ado about nothing thing. We're making too big a fuss about the health of the Eurozone, particularly its so-called ailing banks, which they seem to indicate aren't ailing. The central bank exuded a level of confidence that to me was otherworldly. Kind of a bizarro, me-like-em ugly statement. The type of statement that you wouldn't make unless you had something up your sleeve. Something so encouraging that you could issue this kind of platitude, this banality. Plus, when the White House announced that the president's getting engaged in talking with European leaders, we saw a second run on the stock market. Huge! Well, increased a lot of chatter about a deal, a secret deal that would bail out European banks in a serious way. You know what? Maybe it's a bunch of cards under their sleeves. But the moment you aren't focused on Europe or national aggregate data like employment reports, then you get to peek under the hood of the U.S. economy. And despite the fact that we're seeing a deceleration in hiring, and come on, that is obvious, 3 straight bad months, we just keep hearing good things about individual companies' profits. Please stand up. Please stand up. For example, this morning I was walking the street, we talked to the CEO of Snap-on Tools. Hey, come on, this company's got products that are used by a remarkable 800,000 of the 1.3 million auto mechanics and technicians in this country. Talk about having the pulse of the economy. Well, you know, you read the papers, you know what the pulse is like. Snap-on's business touches the vast majority of the people who service the 225 million vehicles on the road, and we're not getting. What did the CEO say? Basically, that his company is in raging bull mode. Best in years. Auto business, incredibly robust. He talks to everybody, this guy. That confirms what we heard earlier in the week from AutoNation, a retail car dealer where new car sales were up an astounding 45%. But Snap-on CEO Nicholas Pinchuk, he really said it all when he told us, we are a cash-rich and confidence-poor nation. Well, I wrote that one down. I mean, I said, wow, that resonates with me, resonates with the whole economy. Both people and corporations have tons of capital. They've got great balance sheets, best I've ever seen. But people are scared. They got no confidence to do anything with the money. They don't see any real opportunities. They don't see any opportunities to hire because it doesn't seem like business is getting better. I mean, they're making money, but what are they going to do? They got no place to put it. It's not just the autos, though. And they're a gigantic part of the economy. Today, Credit Suisse upgraded a couple of home builders. Smart upgrades came after a huge decline, 13% in the group. Why the upgrades? Because spring is strong. The traffic's great. Prices of homes are going higher, right from the research. Goes beyond housing, too. Last time we got a fabulous number from Dollar General. Hey, don't laugh. Dollar stores are a big part of the economy. More than 90 of the 99% shop. You know, the 99% of America, you know what I mean? They shop there. I like Dollar Tree. They have 99-cent Mike and Ike's, the purple kind. Anyway, today buyers snapped up 30 million shares in the secondary offering of Dollar General that priced at $46.75. Dollar General closed at $48.70. Quick 4.1% gain if you got into the deal. Why did it do so well? Because business is smoking. Hey, so some of you might say, come on, Jim. That's not discretionary spending. All right, how about Dick's Sporting Goods, which caught an upgrade today, soared about 3.5%. Believe me, you don't need to shop at Dick's. Not many necessities sold there unless you are like me and regard fishing as necessary for a happy life. And when you're catching them, a happy diet. Plus, Home Depot held its analyst meeting today. The company's more bullish about its business than any time I can recall during that whole downturn. No wonder they added $500 million to an already bountiful buyback. And then there's Ulta Salon, a $5 billion company that I'll tell you about more later tonight. They reported a monster quarter. Pretty amazing, right, given the punk hiring in the country? Because Ulta sells perfumes and other beauty products. Now, look, I understand it. Sure, the desire to look young and beautiful is an integral lubricant for the wheels of our late-stage capitalist economy. But still, shopping for beauty supplies at Ulta Salon, it's never going to be confused with buying bread, water, or milk at the supermarket. So what is all the belly aching about if things are so darn good? Why can't we just jump into this market with both feet? First is that for the most part, as important as individual companies are, sideshow. They're a I'm like a carnival parker in a sideshow here. Because we're in a moment where the macro, which is not my department, but I had to make it one, the huge issues facing our economy as a whole, as well as the global economy, overrides everything I've been taught since I first bought my stock in 1979. In that sense, today was an outlier. It was like a lovey blanket for me. It's an aberration. It was an anomaly. Most days we're more worried about the strength of Banco Santander and BBVA or about Spanish bond yields when we aren't fretting about weekly jobless claims. We care far more about whether Angela Merkel, who when we started this thing she was Angela, now she's Angela. She's having a snarly day. Oh, be careful. More important than President Obama talking about plans for fixing the U.S. economy. Tomorrow, for instance, Ben Bernanke talks to Congress. Given how little he can do to help our economy at this point, I mean, he controls short-term rates for treasuries. They're already like almost at zero. I feel anything he says is going to be futile. I don't want to listen. It's not going to preempt my show, though, because it doesn't come on till 10. Anyway, that's my other show, Squawk on the Street. There was lots of chatter today about how Bernanke's going to ride to the rescue again. That's not what I want to hear. I want to hear that we don't need a rescuer. But because Europe's casting such a huge and horrible shadow, the Fed chairman will just worry us, and no more than that. You know what? It would be better if he said, I stand by Banco Santander or Societe Generale or some other European bank, just to show that he knows what we really should be worried about, and it sure isn't in this country. Make no mistake about it. If we get no deal from Europe this week, and our weekly jobless claims tomorrow morning are pathetic, then all the good talk from Snap-on or Ulta or AutoNation or Dick's or Home Depot or Lennar or Toll or Pulte won't mean a darn thing. And that's the world we're stuck with. The bottom line, today was a bizarre day when we actually took up the stocks of companies that are doing well. And there happens to be a great deal of them. But we could only do so because we have hope that the best case scenario could be playing out in Europe. And we didn't hear anything negative today about hiring in the U.S. All I can say is listen to me. Savor these days because they're unusual. And we'll be right back to the brutal, unforgiving macro salt mine tomorrow. Daniel in Florida, please, Daniel.
Hey, Jim.
Yo, what's shaking there, partner?
Not much. How are you?
Doing okay. I don't know. I mean, like, the Phillies keep losing. It's starting to really bum me out. Go ahead.
All right. Obviously, with increased market volatility as of late, we have seen an unnerving appetite for quantitative easing in both Europe, the U.S., and perhaps China by the central banks of the world, signaled by the market's anticipation of Mr. Bernanke's speech tomorrow at 10 a.m. So my question to you is, as investors move towards safe haven assets and equities such as Walmart and gold and silver equities, such as GoldCorp, Newmont, American Barricks, SLW, my favorite, SilverCorp, do you see a return to the undervalued gold and silver equities which lag the physical futures market as silver trades at a gold to silver ratio of around 55 to 1, which over the last 3,000 years average closer to 15
Holy
to 1?
cow. All right.
Thank you.
I'm a fast talker, but, man, I think you've gotten me beat. I think that you out-talked me, but I understand. I get the gist of it. It's like, what do we do with gold? What do we do with the economy, with the Federal Reserve? Federal Reserve, they want to print more money. I mean, they're already like, give me a break. There's not much more they can do, but people will buy gold no matter what he says. I like the GLD, and I am willing to sanction a buy of the junior gold miners for a trade only. But I always like GLD. Let's go to Andrew in Maryland, please. Andrew.
Hey, Jim, I enjoy your show. It's really doing a really good job.
Thank you.
I have a question about Brown-Forman. They announced earnings today. Is it a good long-term investment?
What a smoke show. What a report. I mean, Jack, more than Kesha is brushing the teeth with a bottle of Jack.